To Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Toronto at Consensus 2025 by CoinDesk. Joining us for the segment, we have Jill Malandrino. She is the global trading and head of digital asset strategy at Rowe Price. We're here to discuss the benefit of a strategic allocation to Bitcoin and acceleration of tokenization. It is great to see you again, Blue. Welcome back to Trade Talks.
Thanks for having me.
What's interesting is we've seen a decoupling of crypto of Bitcoin from tech and equities. What is the significance of that?
So I think what we've started to see and we sort of got glimpses of in the past few weeks is that when there are questions around strategic allocation away from US dollar based assets, that Bitcoin can outperform. There's very much a generational component to it, that this is sort of digital gold for younger people.
What about thinking of Bitcoin as a macro asset and a strategic allocation? We hear, especially from advisors, that investors are looking for alternative forms of investment. I would see Bitcoin falling underneath that umbrella as well.
So what's super interesting is that oftentimes when sort of markets are normal, the whole sort of across asset classes, you're seeing steady as you go type markets. What happens is that Bitcoin behaves like a tech stock. And it is in these very rare instances where there's real macro questions that it can become and behave like a safe haven asset. And I think there's virtually no other asset that can play that dual role, which is a really interesting sort of bifurcation in terms of characteristics.
Yeah. And what about the acceleration of tokenization? Virtually every conversation that we've had here has been around stablecoins, tokenization.
What I think we're seeing is tokenization move faster than even people in the sort of industry and sector expected. When we look at the questions that the SEC put out, the level of technical depth, the attention that they're paying to tokenization, you can look at the roundtable last Friday. They are talking not just about tokenization of funds, how do we twin a fund and put sort of a mirror copy on chain? They are asking the questions on how do we tokenize the underlying assets. And that's like what revolutionizes the unlock in terms of value.
Right. And when you think about it, with the acceleration of this sector, you're going to start to source liquidity, right? And it's almost like liquidity and the growth is just going to be getting more of that.
Exactly. And I think we're seeing a convergence between sort of TradFi and DeFi.
Mm-hmm.
And I think we're seeing traditional funds, assets being put on chain, but vice versa, we're seeing crypto assets put into traditional wrappers like ETFs. So I think there's a two-way flow right now. And I think it's been accretive to the entire market overall.
When you think about the importance of regulation as it relates to stablecoins specifically, why does that matter standalone? And then why does that matter overall to the space?
So the most basic answer on people ask me, what is stablecoin?
Right.
It's on-chain money. And so when you think about all financial transactions, a lot of those, one leg is an asset and the other leg is fiat or cash. And we need on-chain cash. So it's not necessarily the sexiest thing, but it's sort of what powers the ecosystem and allows things to move. Otherwise, your fiat on-off ramp is always going to be that choke point, that really, really slow sort of piece of the puzzle. And regulation is absolutely critical for that. And I think that we're going to get there. I think it's, looking like it's a little bumpier than many people expected it to be, but we're definitely going to get there.
Well, when you think about the total addressable market globally, there are billions of people that are already using this technology in the absence of legacy institutions, and they're growing microeconomies. They're forming capital in alternative ways. Cross-border payments, e-commerce are the most obvious use cases. It feels as if we're missing out on being able to grow in other areas and get into new markets for that risk.
I think that's absolutely true. And I also, we've seen the Treasury Secretary sort of address this issue, but stable coins are a major driver of demand for US treasuries. And I think it's a very important driver. And in sort of in a broader macro backdrop where other investors may be questioning that, I think we can't afford to lose sight of what an important role stablecoins will play in terms of treasury market demand.
All right, Blue, appreciate the insight as always. Thanks for joining us on Trade Talks. And thanks for joining me from Consensus. I'm Jill Malandrino, Global Market Reporter at Nasdaq.